Hi traders, in this video I'm going to be discussing gold prices and the time of day that you want to be trading this, and maybe a cheeky little strategy as well that you could use in and around these times. Now the first thing I've done, I've just gone to a lower time frame, just on the 15-minute time frame here on gold, and what I've done is I've applied a volume indicator on the bottom. Now the reason why I'm doing this is because a lot of traders like to day trade gold. It's a liquid market, a lot of volume within that market as well, and it makes a good day trading style and is a good market for scalpers and things like that because the volumes are quite high. So looking at the volume here, you want to be trading around those times where the volume is the highest, and the highest volume area is that US session open. So for me, that is 2:30 p.m. GMT till around about 4:30 GMT. That's when we get that sort of area of real kind of aggressive volume coming into the market. We can scale that out a little bit more to around about 5:30 p.m. GMT as well. That's where it really kind of comes into. Now this little box up here that I've drawn is the London and the Asia session, or the European session and the Asia session. Okay, so it would come up into kind of here, right? And all I've done is I've drawn a zone from the low, which is here, okay, and the high of that session, which is here, okay. And the reason I've done that is because what you want to be looking for essentially is, does the market stay within the range, okay, or does it break out of the range? There's the trading strategy. That is looking for the potential reactions from the high at the start of the session on the US, or look at reactions from the low of the range, or look for the potential for a breakout opportunity. Now just to go through a few more examples of this, if we go to Tuesday the 16th of July, you can see that we get a breakout high. Now your bias might be to buy gold. Okay, very good idea to be a buyer of gold recently. We've seen commercial contracts, you know, buying, commercials are buying. We've seen non-commercials buying on commitment to trade reports. You know, there's a good idea to be a gold buyer. Lots of risk in the market as well. Again, so on Tuesday you can see that we have the high of the range, the low of the range, okay, and that is between that time. So if I just go to 2:30 here, okay, that's the 2:30 close, or the open of the US session, and you can see that we've breached the Asia and European session highs, closed above it. Look what happens next. Price takes off to the upside. Okay, so there's a trading strategy within that. Okay, you can look to lower time frames, look at pullbacks, continuations, things like that. Here's another example as well. You can see volume start picking up in the afternoon, but 2:30 you want to be looking for the higher volumes. Now we can get higher volumes at 1:30 because a lot of US data comes out pre-market, which is 1:30 p.m. GMT, and you can see here though we get that nice breakout of the range again, a nice retest, market takes off to the upside. You do have to be aware though, there are going to be times where the market gives you a false breakout, we get a move, but that is beyond 5:30. That is where I wouldn't be looking to necessarily trade gold. What you can see here is the market is actually within the overall range of the market, and you can see it goes and trades to the other side. This is an example of that. So 1:30 we get a very strong move here. Obviously some US dollar data off the back of that. If I go to where the 2:30 candle is though, you can see we're holding the highs, but then we break it, market comes and retests it again. Is there a trading strategy within that area for a break and retest to the upside? So that's just something you can take into consideration when you're looking at gold. Why don't you take a look at when the US session is, how price reacts to the Asia and London trading session, and is there a strategy that you can build around it? Let me know your thoughts in the comments down below, and I'll catch you in the next video.